Our next speaker session is on reimagining the future of financial services through India's digital public infrastructure. Please put your hands together as we welcome on stage Arvind Gupta, CEO and Head, Digital India Foundation. He's going to be speaking on, as we focus on visionary session titled Reimagining the Future of Financial Services Through India's Digital Public Infrastructure. In this session, we will explore the transformative impact of India's robust digital infrastructure on revolutionizing financial services. We'll delve into the critical role of digital identity and data empowerment in shaping a new era of financial inclusivity and access. Furthermore, our discussion will highlight the unprecedented innovation opportunities within the BFSI sector enabled by India's digital public platforms. Ladies and gentlemen, please put your hands together for Mr. Arvind Gupta.
Collar mic by any chance? Good afternoon. I'm trying to see if I can get a collar mic, but can we have everybody settle down? How many of you saw the budget last week? Raise of hands. How many of you heard the budget last week? It was actually technically a vote on account, but something that should that's how I changed my presentation, because when Samir asked me to speak here, I said even the finance minister is now saying DPI is the new factor of production. Did you all notice that? Remember that? Yes, no? Okay. That also tells me how detail-oriented we are on the budget. Now, budget used to be, let it be now, it's too complicated. The budget used to be a very mundane document till a few years ago, but now it's really the statement of intent of the government. And having been involved in the political process of the budget, I can tell you this is something that we need to watch out for. This year's budget, of course, will happen in July. The full budget. This was a vote on account or the interim budget, the way you want to, see it. Couple of things. I'm here. I wear a couple of hats, and hat of digital public infrastructure, which is technology platforms that we are building, number one. But I also work in the venture capital side with the startup fund of funds that we have at a national level. I see a lot of people that we have funded. Part of our fund of funds, and of course on the policy side. So I couldn't help but notice and hear what Anurag was talking about. And I think that's very important, something that I will talk about in the presentation today on the regulatory side, on the policy sides, because while everybody sees policy and regulation as a disabling factor, we have also tried to see how we can make more agile policy making to enable this fintech and startup ecosystem, and DPIs are helping in that. So, a couple of things. This is the Bharat Fintech Summit. Number one, we have to understand that the whole DPI architecture in India is a bottom-up architecture. It started with the intent of solving for the bottom of the pyramid. And but it does not only solve, when it solves for the bottom of the pyramid, it solves for everybody else also. So we, when a KYC, which Anurag was talking about, is enabled, we also ensure that the KYC is enabled and can work the same way in the same ease, but also prevent fraud when it comes to solving for this bottom. India, the Bharat, is at bottom only. 100 million, about 10 crore households are still what we consider from a government perspective below the poverty line, and 80 million households. So 18 crore households out of the 25 crore households in India are either considered poor or just above the poverty line. And that's really the core of what the DPIs are solving for and what Bharat needs solutions for. So we have to keep this context in mind when we talk about that, because sometimes not everybody in India is going to end up using an American Express or a Visa or a MasterCard or an Apple iPhone. We need to know that this is the audience we are solving for, and if that is the audience that you are building for, of course, that audience on the top will also consume it, but that's the income level, that's the audience, that's where the policy is directed towards, that's where the efforts are directed towards. And that's where when the FM says that DPI is the new factor of production, those are the enabling things that we are doing using DPI. Now, the most prominent DPIs that I will talk about, I'll come back to this slide. It's more professorial slide, but you all know these numbers. These numbers speak for themselves. 680 million bank accounts, about 840 million. I made this presentation at the NASSCOM summit, pre-elections 2014. In 2014, February, at the Grand Hyatt in Mumbai, this number of internet users used to be 120 million. Today, it's 840 million, 7x growth. So, and bulk of this growth has happened from the segment that I talked about, the 180 million households, which are at the bottom of the pyramid. So we have to keep that in mind. But when the DPI architecture is discussed, a couple of things we always, we know the fintech stack, the India stack now in and out. I'm not going to repeat that in this audience. But for example, the account aggregator, which is also a techno-regulatory tool, the OSIN that we know. But ONDC, last year I know, first time Koshi spoke and he discussed ONDC. But today, what does ONDC do to the whole DPI story? And am I allowed to ask questions to the audience? No, some organizer. Maybe I can. But somebody should tell me, and not the most learned people sitting in the front, no Deepak, no Abhijit. What does, from a data angle that everybody talks about, this whole data story, what does the big value add ONDC have, apart from its democratizing e-commerce? Anybody who's a data study or data scientist over here? If you think about it, nobody wants to take an attempt. The whole ONDC story is also a SKU story. So far, the payment information, the payment data you had is all payments. You didn't know breakup of the 10 items, the 10 SKUs. ONDC brings that data richness to the whole account aggregator, the data platforms, the consent platforms. And yes, Anurag was right that account aggregator is the first implementation of the Personal Data Protection Act, the consent architecture that is already in place. It was kind of sandboxed and tested there, and then it's going to be implemented to everything else. But to clarify, PDP bill is reality now. It's now set in stone. The implementation is going to be done over time. So if you are not planning for the PDP bill in your business processes, if in your business models, you're going to be in for a shock, like some companies have been in for a shock last week. So please be clear that there is real-time policy making. The policies are out there. You have a window to comply to those policies, but those policies will come into force pretty shortly. So, India Stack, ONDC, Health Platform, OSIN, Account Aggregator, and this is just the starting. I'll present a few things so that you know what we are doing. Aadhaar, everybody knows. Jandhan, 510. This is the new factor of production. We have 510 million, 51 crore new account holders. But the beauty of this is not only just how many people have opened a new account, but again, if you look at the number of deposits these accounts have, which was always criticized that these accounts are zero balance accounts. The zero balance has actually dropped to about 8%. So that means 92% of 510 million accounts have a balance, and an average balance of about $100, 7,000 to 8,000 rupees. Somebody should do the maths and tell me what that is, what that amount is. $500 million into 100 is $50 billion, give or take. $45 billion of savings is sitting in these bank accounts, and so that definitely DPI is a new factor of production because it is enabling a new savings, a new economy which is putting money into the formal system of the country. Quickly, I'm going to tell a few things here on different stories on adoption of DPIs and why it is something that you as Bharat need to think about it. Number one, while we think of tech, business, startups, solutions, banking, whatever else, the common man in India, the consumer who is using, and we have taken UPI as a case study, is using UPI, is actually using it for very, very different reasons than you and me. The amount of insights that people have innovated, while the businesses and startups have innovated in creating a product, but the usage innovation has come from really from the consumers from India. About 400, all of you know 400 million consumers use UPI every month, unique consumers. But you know, 80% of them actually belong to a set of consumers who probably do 2 or 3 transactions a month, 5 transactions, which are their money transfer transactions. For shopkeepers, retailers, if you talk to them, why have they adopted UPI? Of course, ease. But during the G20, what we realized, and this is very insightful, 2 things. Efficiency, which is obvious that they could process a lot more transactions per 10 minutes, per 20 minutes, because they didn't have to deal with change. But the second point, which was so much more eye-opening, which nobody else in the world has figured out, that somebody said it is inflation-proof. This is actually helping them fight and price point their products at the right price. So I'll give you an example. In Varanasi, we took a delegation from the G20, about 46 diplomats. And this shopkeeper, who's of course speaking only in Hindi in a chai shop, said that I can now price this chai and samosa at 12 rupees, not 10, not 15. Because at 15, it becomes highly inflationary. At 10, I lose money. But 12 rupees is the right price point for this. And for him, that was the critical thing of adoption of UPI. And that's something, that's an insight that nobody ever thought of. So there are interesting insights that are coming from India, how people are adapting and the reasons why they are taking up the usage of various DPIs. And the core message that I'm saying in that to this audience is, while you innovate, while you put products in place, keep this in mind that India on top of it will also do their own innovation, the market innovation as I call it, to really leverage these DPIs. And that's where you have to be ready for. So, you know, ready for the products, the platforms that we are building, ready for the market, ready for the regulation. 3 important things that we have to understand in the DPI story. And of course, the policies that are coming up, I already talked about that, that you know, the amount of support the government is doing in these bank accounts that we talked about. 450 billion is what the FM presented in the budget has been transferred using the DBT scheme that the government has, and out of which about 35 billion savings so far. So all these DPIs, that's another thing, have paid for themselves. If I wear the second hat of a venture capitalist, and a lot of time people come to me and say, there's no money to be made in this. That's not true. DPI architecture is a non-rent-seeking architecture, but there's a lot of money that, you know, this $33 billion is going back into building new DPIs. As we are building ONDC, I was a founder member of the team that started building ONDC way back in 2020 actually, 2021 we started ONDC as a company. Today, we have raised more than $100 million in grants. This is not venture capital. It's in grants, actually. And so that means the people who have given us money have zero expectation of any returns. Why have they done that? Because they understand the enablement it will do to the whole ecosystem. And that is something that is from the government. And half of this money, by the way, has come from government, of the $100 million. Why is the government putting money from their own balance sheet is in the true public-private partnership? Because they understand that eventually it's going to save the whole ecosystem $33 billion that DBT saved, for example. So at a very high level, I've talked very briefly about what we are building as DPIs, but what is the thinking behind it is to make sure it is the new factor of production, which means it is solving for innovation, it is solving for Bharat. It is making sure it adds to the savings, preventing leakages or enabling a new ecosystem. But fourthly, also adding to production. Everybody talks about the 40–45% real-time payments that UPI is doing, but again, if you do qualitative and quantitative studies, it shows that it actually saves something like 0.4% of GDP, which nobody ever thinks about. 0.4% of GDP every year, which is a huge amount if you think about it from a fiscal deficit perspective. Finance ministers lose their job if 0.1%, 0.2% of fiscal deficit goes awry. This 0.4% savings every year coming from just using UPI to the economy of the GDP. That's a lot of money. And it pays for itself not 1 year, but 10 years over and over again. So the architecture of DPI is now embedded into our ecosystem. It's not going anywhere. The other product, I always started talking about ONDC, UPI, as I said, the fintech stack, it's done. The other thing you should all be watching out is the voice stack, Bhashini. If you've not started using this, something that you should really critically look at. We started Bhashini project in 2018-19. During COVID, we collected a lot of data points, a lot of parameters, a lot of tokens. Now it's an open stack. Still in the works. For those who are the AI enthusiasts would understand, building voice tokens is a very challenging task. But we have achieved that. This is now available. There's a lot of innovation happening on top of this. So when you talk either on a WhatsApp or on a phone call, and NPCI has integration with Bhashini, so everybody's the voice enablement, the voice keyboarding, the voice messaging that the Bharat needs is coming from Bhashini, and that's something that you should watch out for as we go along. Data aggregation, everybody understands, but I added the next layer to it is that there is this whole element of ONDC giving its the more granular data and another SKU level data. The data scientist in me, the AI, the multiple degrees in computer science that I have studied tells me that is going to make it even more richer as we go along. And that's the story. When you control the input, I think there's a lot of national implications that we have. And from a geopolitical perspective, that gives us a lot of control if we have that kind of data richness. Lot of control. But in our whole ecosystem of DPIs, these are some of the things I always list. Societal benefits, trust. Without trust, we don't build any more DPIs. There is a lot of trust and governance that comes inherent to DPIs. And that's also, as I said, I was hearing the previous panel, it's very core because if you adhere to the core principles of DPI, I can tell you from governance and from regulation, meeting the regulatory requirements, you'll be doing fairly okay. Geopolitical risks are very, it's helping us solve for that. The whole AI/ML transition, it's non-rent seeking, non-monopolistic. And you've seen this, as I said last week, what happened with our friends at Paytm. Eventually, the whole ecosystem is not going to suffer because even if a major player like that goes out of business for whatever the reasons internal to them and at RBI could be. But the last important part, all DPIs are being treated as a techno-regulatory instruments. And this is something very, very unique. The architecture is to be able to do more agile policy making, more agile controls, and ensuring the previous point of non-monopolistic behavior. And those are actually some lessons we have learned from the UPI journey. But as we continue, that's going to be the case. So I don't know how much more time I have, but DPI is, as I said, solving for multiple things. The priorities of the government will remain this, that we make sure that right policies, right data, right AI/ML to solve for healthcare, education, women empowerment, governance. It's fintech, so financial inclusion, of course. But women and health also are some important DPIs that we're building. So insurance and all those products which are probably covered in this conference or you talk about it in this conference are equally important for us. And I'll just leave this last slide with you with some thoughts that regional languages remain important. We are going to solve for Bharat from a DPI perspective. A lot of offline inclusion, open indigenously made platforms. But nowhere we say these are for free. They are non-rent seeking, and that will remain the architecture, and that will help us solve for this bigger challenge of solving for Bharat. Last time, and again, I can talk about it, how FASTag has reached almost 90%, 98% of vehicles in India use a FASTag. Again, the fastest adoption was of FASTag because it was solving both, it was solved with technology, but also with nudges. Today also, you have the 12th lane, and that's a very favorite example. You have, in FASTag, you have, let's say, 12 lanes. 11 lanes work on FASTag. The 12th one works without FASTag, but you have to pay double the amount. And India is intelligent enough, Bharat is intelligent enough to know which lane they have to choose. And if for that lane they have to get a car, that tag just before that, that small counter or small mobile phone operator which is offering that FASTag, they will figure that out, wait for that 5 minutes, but know that they have to save so much money. So that is real Bharat, real action for you. Sometimes in Delhi, in Mumbai, in Bangalore, we miss that. But now policymakers who are working around, thinking around DPI at a national and international level, are constantly thinking of that angle, that how do you ensure that Bharat really gets enabled, and there is more formalization that comes because of it, more jobs that come because of it, of course data richness and all the other technical aspects, but also a value, ecosystem value creation. And we'll keep working on that approach. Because I did ask a few questions to the audience. I don't know whether it is permitted. Samir, where is Samir? He was sitting somewhere. Yes, Samir. Is it permitted to take 1 or 2 questions from the audience if anybody wants to ask? 2 questions, yes, 2 questions. Anybody has any questions, any thoughts, any comments? Very briefly. Yes, there is somebody there.
Hi, Arvind. I'm Siddharth. I'm co-founder of TurboML. So just wanted to hear your thoughts on the Paytm fiasco. So isn't it discouraging to like startups and the entire ecosystem? What your thoughts are on that?
Okay, I cannot comment on Paytm per se, but 2 things, and of course, and there is 2 things, 3 things I can comment on because it's an open forum. Number 1, regulation will, if no longer, and I did mention it briefly, no longer you can operate. There will be a lot of convergence of regulation which is there for the startup world and the real world, if you want to call it that way. There is that grayness will go away. And if you're operating with a lot of grayness with the backing that you're a startup, and it will, you will have to, there will be a time that you will have to comply with that. Number 1. Number 2, proximity to the powers to be does not guarantee you regulatory leeways. We've seen in the case of Facebook, it's a favorite example of mine. The Prime Minister met the Facebook CEO a week, maybe a couple of months ago, and Facebook couldn't get their net basics, whatever they were called that time, the free internet service approved in India. So those are very important things. You have to make sure that there is no regulatory leakages. Time will be given to you, but you have to comply. And I think this whole saga, and we wish Paytm the best, but I'm sure they will come out of it in the best form manner. But there is, as I said, the long rope is long only to a certain extent. It's not an infinitely long rope. I hope you get my message.
Yeah, sure. Thanks.
And that's a very important thing. I can say it in as light a manner as possible. But for all the startups that you are building, make sure that the long rope remains finite and not infinite.
Definitely.
Yes. And please make sure you make amends before the long rope gets over. That's the third part of it. It's very important to understand. The long rope will get over one day. And if you have not made amends, and this is, I mean, whether it was MasterCard, right? I mean, they also went through a regulatory thing. They think they could get away with it, but you can't. And I'm very proud to say that that is the architecture we have. The regulatory architecture is very strong.
Yeah, I think, hello, yeah. Currently, we have close to 3 platforms for providing frictionless credit. One, I think, OCAIN, ONDC, and recently announced RBI Innovation Hub. So how all these 3 will collaborate, and is there any specific purpose for each, or can you just elaborate on these 3 aspects?
RBI Innovation Hub, Rajesh just left.
Yeah.
They are the innovation hub, right? If some existing platform exists, they will try to work with that, and if it is solving for that. ONDC is not going to replace OCAIN. I hope that message has not gone across anywhere. ONDC is going to work with OCAIN, but provide more richer data, for sure. And Innovation Hub is going to sandbox and innovate around it. If need be, they'll create another DPI, and if that happens, that's good. More the merrier. But I want to be very clear based on what you are saying. ONDC is not intending to create its own credit network. It will work with what is existing out there. Does that answer your question? Good. I think we are done with the 2 questions. Thank you very much. Thank you, Samir, for having me as always. Thank you.